Ladies and gentlemen, good day and welcome to Natco Pharma Ltd Q4 FY’25 earnings conference call hosted by B&K Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hrishikesh Patole from B&K Securities. Thank you, and over to you, Mr. Patole.
Good morning, everyone. On behalf of B&K Securities, I welcome you all to the Q4 and full year FY’25 earnings conference call of Natco Pharma. Hope everyone is in good health and doing well. On behalf of Natco today, we have with us Mr. Rajeev Nannapaneni, Vice Chairman and Chief Executive Officer, Mr. Rajesh Chebiyam, Executive Vice President, Crop Health Sciences. I now hand over the call to Rajesh for the management's opening remarks, post which we'll open the session for Q&A. Over to you, sir.
Thank you, Rishikesh. Good morning and welcome everyone to Natco's conference call discussing our earnings results for the fourth quarter and full year of FY’25, which ended March 31st, 2025. During this call, we may be making certain forward-looking statements or statements about future events, and anything said on this call which reflects our outlook for the future must be reviewed in conjunction with the risks that the company faces. I'd like to state that the material of the call, except for participant questions, is the property of Natco and cannot be recorded or rebroadcast without Natco's expressed written permission. We'll begin with the results highlights and then follow with an interactive Q&A session. So hope all of you have received a financial and the press statements that was sent out yesterday. These are also available on our website. So Natco recorded a consolidated total revenue of 4,784 crores for the year ended on 31st March 2025, as against 4,126.9 crores for the last year, reflecting a growth of roughly 16%. Net profit for the period on a consolidated basis was 1,883.4 crores as against 1,388.3 crores last year, showing a growth of 36% in its profit. Company has recorded its highest ever consolidated revenue and profits during this financial year. This is the result of decades of our diligence and focused strategy. For the fourth quarter which ended on March 31st, 2025, the company recorded a net revenue of 1,087.3 crores on a consolidated basis, as against 1,110.3 crores during Q4 of FY’24. Profit for the fourth quarter on a consolidated basis was 406 crore as against 386.3 crores same period last year. During the quarter, the company took an impairment charge of 50 crores in the crop health science business related to property, plant and machinery, and a chargeback adjustment of roughly 25 crores in its US subsidiary, apart from incurring higher R&D expenses. As of today, the company has a strong cash position of over 3,500 crores as it prepares for headwinds coming from its US business during the financial year FY’26. The company estimates a possible dip in revenue by 20% and profits by 30% due to geopolitical uncertainties and pricing pressure in its core product portfolio in the US and increased R&D expenses. Thank you all. Now we'll take questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. As a reminder to all the participants, please restrict yourself to 2 questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question comes from the line of Nirali Shah with Ashika Institutional Equities. Please go ahead.
Hi, Rajiv. Congratulations on great set of numbers. I have three questions. I'll begin with the first one. Could you update us on the current status of the Risdiplam litigation? And are there any upcoming milestones or any legal proceedings that we should be aware of in the near term?
Okay. On Risdiplam, I think we believe, if all goes well, it will be reserved for order by end of this month. There's only like one last hearing left. I think it will get done today or maximum, I think, hopefully we'll be able to close everything by end of this month. And so we expect an order in maybe post-holidays in June. I think Delhi High Court is closed. So I think July, August, I think we should expect some order on that. Right now, we have not launched the product. We're waiting for the clarity from the two-judge bench, and then based on that, we'll strategize what to do.
So, say if the order comes in our favor, within how many months do we look at the launch?
I think if the order is in our favor and everything is good, I would believe we can launch immediately.
Okay. My second one is on the clarity on the progress of NRC 2694. Any timelines or catalysts that we should be tracking?
At this time, I don't have any timelines, Nirali. So I think we just kind of updated our NC and cell and gene therapy ideas. It's there in the public domain in the presentation. At this time, I think what we've done is we've taken a very late-stage cancer subset of head and neck cancer and who have failed the conventional therapy, which is Keytruda. So right now the trial is ongoing. We're doing it both US and India. So I think I don't want to give any timelines at this time. I think maybe in about a year and a half, we'll have more clarity on this.
We are still on the patient's recruitment front, or is it done?
I think we need to get to a number where it is substantial. I think so far I don't recollect the numbers, Ranira, so I don't want to say anything. But we have done, I think, about a little more. I don't know how many patients we have done. I think about between 10 to 20 patients. I don't remember the number on top of my head, but I think I don't remember the protocol also, how many patients we have to do. But I think once we get to about, 60 to 70, I think we'll have an idea where we are. So we hope that we'll be able to recruit these patients in the next 1.5 years, and then I think we'll have clarity on how it works.
Okay. And my last one is on the Trump tariff and the Trump campaign. So regarding the aggressive drug price cuts and the potential import tariffs, how do we see this evolving in terms of the impact that could be on our business?
Obviously, a lot of our business is in the US, so obviously there'll be some impact. So far, I think we're okay. So let's wait. It's a very dynamic situation. So I think let's see how things go, and then we can make an assessment of what will happen. It's too early to say anything.
In the opening commentary, you mentioned about FY'26. So do we look at it as a softer year for us because of the evolving scenario? I'm saying in the opening commentary, you mentioned about yes.
Yeah, headwinds. Yes. Yeah. What about it, Nirali? What about it?
Yeah. So
what is your question?
We do see. I'm saying that because of the Trump issues and whatever is going on in the US because of the policies, we do see that our portfolio will be hampered because of this. We do face the headwinds.
I think, we don't really know what's in store in the future, no? I think that's what I'm trying to tell. I don't know what's going to happen, right, in the next few months. So I think once we have clarity on what's going to happen and what their policies are going to be, I think then we can make an assessment of what the impact is going to be. But as of now, I think we're just waiting for clarity on what's actually going to happen. So I would be, it would be premature to say anything at this time. So I would just reserve saying anything. But I would just say that once we get clarity, and then I think we can make an assessment of what's actually going to happen, what the impact is going to be. Yeah? Is that fair?
Understood. Yeah, that's it. Thank you.
All right then. Thank you. Let's give a chance to another person, please. Thank you. Next caller. Thank you.
Thank you. Next question comes from the line of Rashmi Shetty with Dollard Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, in the opening remarks, if I'm clear, you mentioned 20% dip in the sales and 30% dip in the profits for FY'26, right?
That's correct. That's correct, yes.
Yeah. So, is this also because you're going to see any sort of erosion in your Revlimid product, despite we will be taking the maximum market share, right, this year?
I think it factors everything in. I think we believe, I think we should do well in the next couple of quarters. I feel June quarter and September quarter, we should do well. But I think after that, it's very difficult to judge what's going to happen. So we're being cautious. So we gave the guidance upfront so that the investors are aware of how we see the business. And I think that's our assessment. And because, as I said, there are multiple things happening. Just among development pricing scenario is very tough to judge. I mean, political scenario is very difficult to judge. And also, we have also decided to spend good amount of money on R&D. And so we have very good surplus. So we're using the surplus to sort of spend on our R&D budget. So I think because of these three factors, I think we have sort of made our best guess estimate of what we think the year is going to be. Yeah, I think that's
and it is also supported by the fact that Revlimid might see higher price erosion compared to this year.
I think so, ma'am. I think that's I think at the end of the day, I'm making a guess. I mean, based on what's going to happen. But yes, I think we factored. That's my knowledge. I think we made an estimate what we believe will happen. Yes, fair.
Okay. And so related to R&D, you said how much is the R&D in this year you have spent for the entire year, and how much are you expecting in FY'26?
We spent 373 crores, which is 8.5% of our standalone revenue in R&D for the financial year ending March 2025. I would want to spend, I think, a similar amount of money this year as well. So we have some very nice projects that we have lined up. And I think the really good ones are always very expensive. So I think that's what we're trying to do. But I think we want to spend about in that range, up to 400 crores is what we're targeting.
Okay. And one last question on the India business. This year, every quarter we had done in the range of 95 to 100 crores. And we are also planning to see some acquisitions with the cash flow. But till the time the acquisition doesn't happen, what kind of growth, we can expect in FY'26? Will it be in the similar range of that 2-3% growth, or, we should expect, a higher growth this year?
I think of the publicly announced pipeline, I think the base business should grow around 7 to 10%. But I think the two major launches that will drive the growth, I think one is Risdiplam, subject to the court decision, and of course, semaglutide, which we're expecting maybe end of the year. So these two are going to be very critical to the growth. If these two come through, I think you'll see much more than 8-10% type of growth. You'll see much more. But I think getting these two right would probably be very important for us to see very good growth. But I'm optimistic that, both will work, subject to obviously, in Risdiplam, the court decision, and semaglutide, once we have the market formation and get the approval, when we have clarity, I think, both these products should be very interesting. And I believe that our domestic should do well. You'll see much better growth than what you're seeing now.
Okay, sir. Thank you.
These two coming through. Okay.
Okay, sir. Thank you so much.
The next caller, please. Next caller, please.
Thank you. Next question comes from the line of Kunal Randeria with Axis Capital. Please go ahead.
Hi, good morning. Rajiv, on Revlimid, I thought you would be booking some profit in FY'26 also for the sales that Teva would have made last year. And since Teva's quota has gone up this year, I thought some of it would also be booked in FY'27. So does that still hold or have the accounting changed?
I didn't understand your question, Kunal. I'll tell you what I understand from it. I think for the new quota that we got, we booked some amount in the March quarter, which is the January to March quarter in 2025. And this quota we will start selling. We're selling now, and we'll sell in the June quarter and the September quarter. And then I think December, I'm not able to predict what's going to happen, so that's why we're being cautious. And in the March of for the 26 year, it will be, it'll be a lot of competition, and there won't be any quantity restrictions. So it will be, it'll be very...
No, Rajiv, I got that. Sorry, what I was asking is, see, typically you manufacture and sell it to Teva, and Teva then sells it to the, distributor. And once Teva gives you the profit, typically it is a lag, or you recognize it maybe a couple of quarters late. So whatever Teva, let's say, sells in September, I think you book it in December or March. So that was my question.
No. I think what we had gave to Teva, we already gave. I think the quantity that we're supposed to give, we already shipped to Teva already. I think what we're booking now is only the profit share. So we booked some amount last quarter, and we continue to book in the coming quarters as we go along.
Right. Okay. So if my understanding is correct,
okay,
you have already supplied for this year to them. Okay. Perfect.
Already supplied.
Perfect.
That's okay.
Oh, that makes sense. Thank you. Yeah, just a couple of more questions.
Okay. Thank you.
For semaglutide... Sorry, Rajiv.
For semaglutide, yes. Yeah, go ahead.
Yeah, so semaglutide, will you be needing some investments to promote it in India, in sales force, or will you be partnering with the larger players?
We are thinking of both the models, Kunal. I think we are looking at both P2B model and also our own sales force. We have built the sales force to cover this segment. Over the last 3-4 years, we have actually able to, build a sales force to cover the doctors that are required for this product. We have the setup, but obviously we're looking at both dual revenue. We'll look at both P2B and our own brand as well.
Sure. And just one more. I was a bit surprised with the impairment in this property plant equipment of the agrochem business. So are you kind of scaling back your plans for this business?
No, Kunal. It's just an accounting entry. It's a non-cash entry. Essentially what it is the business has not done well in the last 2-3 years. We've not made money. So I think with our consulting, with our auditing firm, I think they assessed that we need to take impairment of this. This can be reversed. Let's say, for example, in 26, the business starts making money, then which we hope to, then some of the impairment can be reversed. But this is taken a conservative position, and we've been, I think it's prudent to do it. That's why we've done it.
Got it. Thank you.
Okay. Next caller, please.
Thank you. Next question comes from the line of Nitin Agarwal with DAM Capital. Please go ahead.
All right. Thanks for taking the question. Rajiv, on R&D, how many products have you filed this year, and how many were meaningful in your assessment in FY'25? And how are you looking at 26, 27, if you can?
Give me a moment. Total filings, I think, in the US, we had about 5 filings in the US, and meaningful ones means a lot of them are shared exclusivity. I think there's nothing special that come to my mind other than the ones that we've already announced. But that was the question, right? How many we have filed, and next year, how many we intend to file? About 7 to 8 is what we're targeting. And the interesting ones that we got this... Yeah, go ahead.
No, it was exactly the same point. Interesting one that you got this year, and how many do you probably see coming through over the next couple of years from a filing perspective?
I think the interesting one that we got this year was probably, was one of the strengths of semaglutide, where we're sole FTF. We filed something in April 2024. So that was probably the most exciting one that we filed. We filed Resdiplam, that's also shared FTF. we are one of the two. So I think these are two big ones that we filed in the last financial year. The interesting ones, Nitin, we spoke about this many times. Semaglutide is probably the biggest one that we have, where we have some strength we have Solapir. So that's probably the biggest one that we have. Then we have, I think, subject to the legal clarity and approval, Olaparib could be very interesting. Then we have medium size. We have Dasatinib, Capmatinib. That's also an interesting that we filed. Then we have shared FTF on Yondelis and then Carfilzomib. And then we have Irbutinib, subject to the legal outcome. So we have like 7 or 8 things. So I think it plays out over the next 10 years. So maybe we don't have anything in the next 1 or 2 in near term, but I think you take an 8 to 10 year view, we have these. And also we updated our investors on some of our NC and cell and gene therapy investments. I think the most excited one, some of them are smaller ones and some are bigger ones. The big ones that I look at is probably the NRC-2694, which is a late stage head and neck cancer where we're doing a phase 2. So we have very interesting phase 2 data. We can probably even get it approved with limited number of patients. So that is one possible excitement. And another one is one of our cell and gene investments. We made an investment of $8 million in eGenesis. They were the first one in the world to do a xenotransplant, where they transplanted a genetically modified pig kidney into a human. And there's one particular patient who's actively on the kidney, and I think it's been about 4 months and is still doing well. So these are probably the most exciting ones in our NC, cell and gene, and then probably the Paraforce. So the idea here, Nitin, is that you build a pipeline of about 15 of them. I think even if you get like 6 or 7 of them right, I think you're home. I think that's the idea. Okay?
Right. And just last one on Revlimid, have you been surprised by from some earlier expectations versus the way the market is really expected to play out in 26? Or are you seeing it playing out in 26?
I'm not, honestly, Nitin, I am not surprised. I think I've always been very conservative. I always believe that you'll see erosion as time goes by. I'm not actually surprised. I'm actually just fitting in pretty much what our expectation was.
Thank you so much.
Okay, thank you, sir. Thank you. Next follow-up.
Thank you. Next question comes from the line of Rohit with iThought PMS. Please go ahead.
Yeah, good morning, Rajiv. Thank you, and congratulations on all the hard work that the team has done. Rajiv, most of the questions have been answered. Just 2 or 3 of them as a follow-up. So one is on this agro business. So this was a foray that he had started 3 years back, and I think it's below expectations. So what is the thought process now? How do you see it over the next 2-3 years? If you can maybe share your strategy and thought process there. That was one. Second was, given the cash that we have, and you've talked about acquisitions, so anything that, any update or anything that you would like to share on that in terms of any thoughts that have evolved over time?
Okay, sure. Got it. Let me just answer those 2 questions. Just one. So let me just answer these 2, then you can. So the first question that you had was on the just refresh me again. Agro business. The agro business, obviously, it's not done well. It has not met our expectation, but it is what it is. So I think this year, we feel we are going to hit that critical mass where we'll start breaking even. I think our expectation is that we need to hit we're doing about 60 crores net revenue, so last year. So I think we need to hit about 160 to 170 at least to have that EBITDA positive. So I think that's the idea. So I think hopefully we'll hit that number this year, and hopefully if we go beyond that, then we'll actually be profitable. I think 26 is the year that 25-26 is the year when it's going to turn around. The other question was on the cash, right? As we announced, we had about 3,000 crores of cash. Now I think we received further receivables, so I think we are probably sitting now at 3,500. It's a good place to be, honestly. I wouldn't complain. How do we use the cash? We're looking at acquisitions. We're looking at a lot of active acquisitions. I think I'm positive that we'll be able to close something in this financial year. I think that's the idea. I think that's all I can say this time.
Right. And
next, I'm sorry. Next question.
Yeah, sorry.
Go ahead.
One follow-up again on agro. So while you shared that this may be the year where we'll turn around, but slightly longer term in terms of the strategy here, I remember you wanted this business to get to about 300-400 crores or around that number in your like scaling this business up. So just, I mean, from here on, of course, it did not pan out, and that's fine. But from here on, are you sort of still like positive on this overall opportunity? Anything on that? And then one more question on, I think you've given out this NC and your sort of the NC and all the other moonshots that you have, investment that you've done. Should we look at it as like your conviction in them has become better and you're closer to some kind of an outcome, and that's why you're sharing now? Because in the past, I mean, people have asked and you've sort of really not talked a lot on them, and I'm sort of hearing you for the first time speaking a bit more. So is it sort of, should we take it as like your conviction in them has improved as you get more information or as you get more closer to sort of outcomes there? So these were some of the questions I have. Yeah. Thank you.
So first question is on the NC, and the other question was on the, what you call the agro success. Okay. Along the, let me tell you, I mean, we make certain judgments as a business, and some businesses turn around in 2 years, some businesses take 5 years, some businesses take 8 years. So it's a cycle that you just have to live with based on how you sort of execute. And sometimes you get them right, sometimes you don't get them right. So I think agro is something that is probably taking longer, but it is what it is. I mean, as I said, you just have to deal with it. But my personal sense is that, it will get better. I think first point I always look for in a business is that it has to start breaking even. So once it starts breaking even, it doesn't cause a strain on the balance sheet. And then just you need that one idea which can always suddenly start turning profit, right? Because to build a successful business, you need to have the core portfolio which kind of pays the bills, and then you'll have what you call one idea that will, just take that business to the next level. So I think hopefully we'll reach that stage in agro shortly by hitting that number. But 150, 160 is what we probably need to hit. So I'm starting small. Let's hit that number. I think then we're not losing money, and then we can target the next number. But it's a 2 to 3 year journey, I suspect, to get that to that level. Regarding my NC and the cell and gene therapy, yes, I think so. I generally don't like to talk about when they're early stage. I think in the past, a lot of people have asked me, and I said, no, it's too early stage. We'll talk about it later. I think I feel more confident that these things are coming to a stage where we can probably hit something. So that's why I'm talking about it. So I think yes, specifically yes, especially those two assets that I mentioned a few minutes ago. I'm very excited about both these assets right now. So again, as I said, there's no guarantee that everything will work out, but I think, as I said, the idea in this business is that you build like about 10 to 15 ideas, and then, even if you get half of them through, then you're home. And I think we're also sort of, rethink, you have to reimagine your business every few years, right? So, I mean, a pure generics play is going to be very competitive, and your moonshot ideas cannot stick only to generics, right? You need to also look at NCE. So, and I think doing an NCE program in our balance sheet also becomes very, it's very stressful as well. So what we have done is we adopted a strategy of we've done some smaller investments and larger ones, but obviously 2694 and the Xeno transplant one are probably the bigger ones. So if something good happens there, then obviously we all will have a good upside. So that's the expectation. Yeah. Okay.
Yeah. Thank you.
Thanks.
Thank you. Next question comes from the line of Bino Pattiparambil with Elara Capital. Please go ahead.
Hi, good morning. Rajiv, first of all, when you say profit decline of 30%, are you talking about EBITDA decline of 30% or at PAT level?
Right.
PAT level 30. Okay. Second, you have you have scaled up your R&D investment because you had a lot of money coming from Revlimid, etc. So going into FY'27, although it is a bit early, is there any kind of an indicative margin range that you can give at the EBITDA level?
At this time, no, because it's hard to predict anything right now because there's so many moving parts. The moving parts would be that some of our Para 4s, if some of them come through, there could be some upside there. And then obviously the semaglutide upside is probably not factored in the 27 numbers. So I think it's very dynamic. So I think once we're coming closer to as the year progresses, then I think we'll have more clarity of how 27 is going to look. Then I think we can give some guidance. At this time, I would dissuade from doing that. I think it's too early.
Okay. And this risk plan, if you get a favorable judgment, would you expect other Indian players to come into the market as well immediately?
We'll see some competition, but everything goes well and we launch, then we'll have first mover advantage, so that is always good. In this business, being first mover is everything. So theoretically, yes, if we get a favorable order, other companies can also come, theoretically. Yes, that is possible, yes. But we clearly have the first mover advantage.
Right. One last question on semaglutide. So have you sorted out all your device, etc., and would your fill and finish be internal? Have you figured all those things out?
I think so. I think we're getting there. Our clinical trial has already started in India, so we're hoping that we'll be able to complete everything on time and we'll be able to be on there when the market formation happens. Early next year. So I think that's our expectation. I think we're in good shape. As of now, I think everything looks good.
And you're planning?
When we come closer to the launch, yeah.
Okay. And you're planning your own capacity?
We're planning our own capacity, you said? No, we are using a CMO for the cartridge filling. We're with one source on this.
Okay. API will be yours.
All right. Thank you. Next caller, please.
Thank you.
Thank you. Next question comes from the line of Rishit Jhaveri with Pi Square Investments. Please go ahead.
Good morning, sir. First question on the CapEx plan. Do we have any significant CapEx plan for next year, 26?
We have general CapEx. I mean, there's always something going on. Every year we spend about 300, 350. So I mean, we have a CapEx plan of about 500, 600, but I think per year, looks like we're going to spend about 300. I think we could take about 1.5, 2 years to build these projects. 300, 350 seems, I think, a reasonable amount of CapEx that we'll do per year.
Okay, understood. And sir, on the guidance which you gave, I think that first half of FY'26 will still have some good growth in terms of June and September. So are you seeing the H2 to be really bad? That's why the entire year will take a hit, or the H1 and H2 both will take a significant hit as compared to the FY'25?
I think, I will not use the language that you would use, but I would say that the first half will be good, but the second half will not be as strong as the second half. The second half will be weaker than the first half. I think the first half should be strong, and the second half will not be as strong as the first half. Yes. You will definitely see a difference, yes. Yeah. Because there's so many moving factors, so that's why I think we've been conservative in our guidance, yes. But you're right. Principally, you're right. I think the first half should look good, and the second half is, as you would say, not as strong. Yes, that's correct. Yes.
Okay, understood. So just the last question, given the guidance, you have already discounted the higher tariffs from the US government, or we have not discounted it? And if we have already discounted it, any relief there would drive up the guidance significantly?
As I said, when we make an estimation, we consider multiple factors and multiple assumptions. If I have to change my assumptions, I'll come and tell you based on how the policies change. But we have assumed, the political risk and the change in the portfolio and the R&D expenditure. So I think we've factored certain things in, but again, and there's too many moving parts, my friend. So you can't say, this event happened, that's the reason why did this go up or come down. I don't want to get into it because, that what we can do as a company is only make an estimate. So I think that's what we're trying to do based on the situation.
Right.
And I think that sounds reasonable. I think generally our estimates are, we've been very reasonable in our estimates. I think one or two times we are also surprised, but for most part, I think, we get most of the times we get our estimates right. So I think, again, there are always some things that I can't control, which could change things. But as of today, I think that's what it feels like.
Correct. And any inorganic deal on the table right now or no?
Yes, we are pursuing a couple of deals. But again, we've been saying that. So hopefully we'll be able to close something this financial year. Yeah.
Okay. Thank you and all the best, sir.
Yeah, thanks so much. Next caller, please.
Thank you. Next question comes from the line of Abdul Qadir Puranwala with ICICI Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So firstly, on the R&D budget of 400 crores what you have earmarked for this year, what percentage of this would be spent on the NCE projects and in Agrichem, if you could help us with that, please?
Of the 400, how much are you going to spend on NCE and how much you're not going to... the NCE will probably see about, I think, 25 to 30 crores. 30 crores I would estimate in that amount. I'm making an estimate, Abdul. Don't hold me to it. But if I were to make an educated guess sitting here, I think about that and rest of it will be on generics.
Sure, understood.
I think we deliberately didn't want to do too many NCE programs, Abdul, because it becomes too much strain on the balance sheet. So a lot of the other programs we have done only equity investments because we wanted to balance, trying to, get the right amount of R&D at the same time. Don't want to tie up too much of the surplus and expensing too much R&D. So again, that's the balance we're trying to strike.
Sure, sir. Understood. And so next on your capital allocation from here on, so R&D, you have guided CapEx, you said another 350 crores. So with, say, 700 to 750 crores spending every year, for any inorganic group to pursue ahead, would you even want to raise your balance sheet, some debt on the balance sheet if the need may be?
Right now, we don't need that, Abdul. I think right now we're very comfortable. I think when it comes to costing, we'll see. I think as of now, I don't want to comment. As of now, we're comfortable. Yeah.
Okay, sir. Thank you. And I'll be back with you.
Okay. Thank you. Thank you. Next caller, please.
Thank you. Next question comes from the line of Chetan Doshi with Tulsi Capital. Please go ahead.
Good morning, Rajiv, and thanks for giving the opportunity. See, what I have been observing is you are very conservative in giving the, forecasting about the overall business, and you always exceed. Whatever you say so, you exceed in the end of the year. That is my observation. So anyway, congratulations. Even 30% drop on current profit, that is close to financial year 24, that much profit will do. So don't you think you need to be a little bit liberal on distribution of the profits to the shareholders? And second question is, what is the size of acquisition you are looking forward to in which we intend to close in this financial year?
Size of the acquisitions, I don't want to comment. It's very premature, so I don't want to answer that question. Regarding distribution of the money, as of now, I'm saving all the money for the acquisition. So we believe that we'll be able to close something. That's the reason why we have not given an aggressive dividend. So I think you're right. Regarding the guidances, I think it's always you people are harsh when we say something higher and then we deliver, then market is harsh. So it's better to say something less and deliver more. So I think that's what I've learned. So,
No, but sorry to interrupt you, but
I think it's safer this way.
One of your idea clicks, you can surpass your current year profits also. One of the idea, it goes on floor, then it is a big boost to Natco, that is for sure.
Right. Thank you, sir. Thank you so much. Yes. The next caller, please.
Thank you. Next question comes from the line of Sri Hari with PCS Securities. Please go ahead.
Yeah, am I audible?
Yeah, please go ahead.
Yeah, thank you. Two questions. Firstly, if you could please talk about the non-US formulation exports market. And secondly, if I look at the cost base X of R&D, you have spent close to 1,200 crores in FY'25. So what is the kind of scale down you have considered in for FY'26? Thank you.
I didn't catch your question. Can you rephrase both your questions? I didn't catch both of them. I'm sorry. I didn't understand both the questions. Can you say that again one more time, please?
Yeah, formulation exports X of US and the cost base X of R&D. How much scale down you're looking at?
Scale down because of what?
You would obviously have some pressure at the EBITDA level, so you might have planned some kind of a cost reduction.
I think I'll give you a general answer. I'm trying to understand what your question is. The R&D spend is driven by obviously the EBITDA that we have. So I think we have a pretty good plan this year, and last year we spent a good amount of money. Next year, even 26 March also we should be able to do well. Regarding the R&D expenditure in 27, I think we'll make that assessment based on what surplus we see that year, and I think we'll make that judgment. Maybe we can give you some light on that end of the year. The R&D expenditure is obviously linked with the amount of EBITDA that you're making, and based on how much money you believe you're going to make, then you have to make a plan. Okay, fine, I'm not making so much surplus, then I have to scale it down, but if I believe there's a reasonable amount of surplus, then I'll continue to spend this much. So we'll make that judgment closer to the time. As of now, it's hard to comment. Okay, and what is the other question you said? I didn't catch. So
no, I was talking about expenditure X of R&D. That was, I think, around close to 1,200 crores for FY'26. So are you looking at a reduction there?
Reduction in what? The exports to US, you're saying, or?
No. The expenditure X of R&D.
Expenditure. Do I see any reduction in the expenditure X of R&D? Is that what you're saying? Okay.
Exactly. Yeah.
I think we have. We'll see. We always want to challenge ourselves on whether we can reduce our costs beyond that. I think we have done a lot of cost cutting. We have done a VRS program about 2 years ago. I think costs, we're looking at it all the time. Yes. It's an ongoing process all the time. I think it's something that everybody does it.
Yeah, and the first question was exports of formulations X of US.
X of US. Give me a moment here. So, let me see. I would say about 800 to 900 crores, minus US.
Is that the estimate for FY'26 or 25 number?
Yeah, I don't have the split, my friend. I'm making an estimate because I don't have the split literally the way you want it. I've not come prepared to answer that. I'll be better prepared next time, but yeah, I don't have the number, but roughly about that is what I see.
Oh, okay, fine.
Okay.
Thank you.
Okay.
Thank you. Next question comes from the line of Gagan Tareja with ASK Investment Managers. Please go ahead.
Yeah. Good morning. I hope I'm audible. Hello.
Yeah, go ahead. Please go ahead.
Yeah. Sir, does your guidance bake in the launch of Risdiplam and Sema next year?
No.
Okay, fine. And India, you're pointing to a substantial improvement in sales next year. Can you elaborate? I mean, is it basis launches other than Sema?
These two are the big ones, my friend. These are the two big ideas. If they work, then that will drive the growth. Otherwise, see, you need to understand, I mean, I think generally the business is very competitive. I mean, you look at our peers, everybody is financially strong. So the opportunity only happens when you do that special product. To do something that everybody is doing, it's very difficult to get growth. You only get that anemic, whatever, 7, 8%, 10% growth. But you want something dramatic to happen, you need that special product. And I think that's why I keep talking about these special products, because this is what drives the growth. So I believe that if you want to get above market growth, you need to get these two right, I think. In my view, at least top of my mind right now, these two are the big ones we have to get right.
Right. And for the non-US markets, Canada also, would you be there in the first wave for semaglutide launch? And generally, I mean, on that base of 800, 900 crores, how do you see growth happening next year?
I think we are not going to be in the first wave. I think we're working on it, but we're not in the first wave in Canada. I think that's my understanding. And we're tied up with Mylan on this product. We access with this product. We're not doing it directly. But,
okay. But otherwise, is the growth going to be, healthy in the non-US export markets for you on the current base?
I would believe so. I think we're doing very well in the MENA region, and we're doing very well in Canada and Brazil. We have very good launches, so I think so. Yeah, we should do well.
Right. The final one, sir. Last quarter, you indicated it would make a lot of sense for you to get a manufacturing or a distribution base in US, given the current circumstances. Would the acquisition that you're considering be in that direction?
Yes, that's one of the acquisitions we're looking at. Yes, yeah.
Okay. Thanks. I'll get back in the queue. Thanks for taking the questions.
That's right. Thank you so much. Next caller, please.
Thank you. Next question comes from the line of Rahul, an individual investor. Please go ahead.
Hello. Hi. Is it me?
Yeah, go ahead, Rahul.
Yes, sir. I just wanted to know a couple of questions. Have you informed the US FDA that Kothur plant is ready for reinspection? The warning letter, or how does it happen? Have we sorted out all the...
Giving constant updates on... Yeah, I think we constantly give updates on the things that we're doing. So our updates, our remedial action is going on, and our updations are given. We hope to inform them, I think, sometime this year. I think we're not informed them. The question is, did you inform FDA for a reinspection? No, not yet.
In a sense, yeah. I just want to know whether it is over, the remedial. The remedial is still ongoing.
It's still ongoing. It's still ongoing. But we continue to supply from the site. It's not that there's restriction on supply on the site, but we're not getting new approvals on the site. I think that's what is happening at this time.
Yes, sir. Sir, there was a 2009 article on your company. It said a lot of things about the history and all I read. But it also said something like our company holds close to 400 acres of land. And, I'm just saying because last year we sold a little bit of it, including where your plants are there. So, sir, is this like an untapped gold mine still we have, or we have sold most of it, or what is the status there, sir?
It's still there, my friend. It's still there. I think, but to monetize an asset like that, usually what happens is, it is, something you could always monetize. I think when we get the right party like Microsoft in that particular example, we sold it to Microsoft for a data center. So it was a good rate and we got it. But, you need to do some amount of work. You need to do the basic infrastructure. And usually when you have a large parcel like that, you always have these niggling litigation from some portion. Because right. In India, land titles are always very tricky. But if you're able to, I'm not saying that there's litigation for all the pieces, but there's always some for some pieces here and there, few acres here and there, there's always some, frivolous litigation. So it can be monetized over a period of, let's say, if you take a 4 to 5 year view, yes, yeah, we can definitely monetize. It's valuable property. It's 1 hour from the city of Hyderabad, so near a metro, always it's valuable. Yeah, I think hopefully we'll be able to bring some value there as well. Yes.
So I was just going through the segment reporting. So in the the crop health division, actually year on year our top line has reduced, the sales have reduced, and obviously the losses have also increased. I think we have set segment loss over 150 crores this year. That's your optimism, in the coming years is based on what, sir? Because historically, though we have reduced numbers. What is the strategy out here?
I'll tell you. Okay, the loss also represents the impairment that we have taken. Okay, let's start with that. And the second is, what has happened was when we stocked the product in 2 years ago, and then basically what happens is a lot of the stock came back as returns. So the sale reduction is because of returns of the previous year. It's a new business. I know. I mean, it's not a good place to be, but because it's a new business, it took us a while to sort of figure out how the distribution works. How do you manage the controls? How do you make sure that the stock is liquidated? So I think it's getting better. I mean, as I said, because of the returns and all, we had to take a loss, and a reduction in sale. So when something comes back as return, then you have to reduce the sales. So, but I think it's looking better. I think if you look at the cash flow, we have. Even the sale was 60 crores. We actually had a cash flow of almost 85 to 90 crores. So cash flow in my world is a true indicator of whether you're selling the product. So I think we're getting there. So I think 150 is a number that we need to be there. So I believe that we'll be able to get there this year. But see, I tell you, my friend, generally when you start a new business, it is not a fairy tale, right? You come in and then you start making money on day one. And especially when you're doing a business that you're not having a setup, before a greenfield, it's always going to be a challenge. To build a business, in my experience, has always been, it takes about 4 to 5 years. And sometimes you get lucky and things turn around in a year or two. So unfortunately, Agro is coming in that median where it is a 4 to 5 year time. But I think we're getting there. It's not as bad as it looks. It should get better.
We are not calling it quits out here, no, sir. I mean, we are going to become stronger because this is something we were all hoping will be a great pivot.
No, the thing is, in a business, you're going to get, it's going to take some time, and this is one of those businesses that's taking time. But we believe that, sometimes, see what happens is obviously nobody likes losing money, but what happens is sometimes businesses do take 4 or 5 years to build. And it is one of those. And but I believe that we're at the end of the tunnel, and I think it should be able to break even this year. Yeah.
Right. Sir, one last question, sir.
Next question, please.
I had the good fortune of hearing your 2020 Money Life interview. Your comments and your outlook and all, it's just the same all these 5 years. But sir, you have a disdain for mutual fund industry, sir, and we need more institutional investments. So do we as a corporate strategy have any, it's not working out. We just go up and down now. It's too volatile for our market cap. I mean, do you think, because I've seen other companies in your market cap, they're doing 10%.
I don't have disdain for anyone, honestly.
It was right there, sir.
No, hear me out. Just hear me out. So, see, I tell you something. See, what happens is our business has volatility. I think I'll be very honest with you. And what happens is, there are some mutual funds who are with us, and I think they understand our volatility and they're willing to be with us and willing to ride the volatility. And if you look at our return on capital, the profits that we generate, they're as good as any of your top 10 Indian companies, right? But the issue is, a lot of the times, it's not a criticism, but it is, we need to accept people don't want volatility in their NAV. I think what they want is something that delivers 10%, 15% compounded growth consistently without too many, volatile elements coming in. And those assets have higher value than assets like ours who deliver great profits but have a little element of volatility. And I think people who understand are there with us as investors. People who don't understand that are not there. And they also have their own, limitations. But see, you can't change what you're doing, right? I mean, it is what it is, and you just have to communicate what you're doing, and people will come along. I think that's how you are looking.
So this new investment that we're looking for will be a straight cut investment, right? It won't be a moonshot and all. It'll be like buying a business or something, which is to existing business, like it's a brownfield investment you're looking for.
No, I think what we're trying, when you do an acquisition, if you're buying a front end or you're trying to buy a new market, it'll be a brownfield, yes. And moonshots make money, my friend. Don't discount moonshots. All our moonshots, a lot of our moonshots have been successful. So
I have one last question, sir. How are we going to monetize Cellogen, sir? Because that is not a company that we own. Is it like when it gets listed, we get money? Like what is it in for us?
It's very early stage, my friend. It's a very early stage company. I don't want to. It's too early to talk about it. They have a very interesting CAR-T pipeline, and CAR-T is something that we don't have a skill set in Natco, so that's why we invested in them. But they'll all come to fruition. You just have to be patient, and then we'll get the opportunity if they do well. So I think any business idea will always take you 5 to 7 years. Otherwise, it doesn't happen. I think that's how it works. Yeah. Okay then. Let's give a chance to someone else, please. One last question. Thank you.
Thank you. Next question comes on the line of Nitin Agarwal with DAM Capital. Please go ahead.
Hi, thanks. Rajeev, thanks for taking the question again. Two things. One is on the NC molecule. How should we think about the milestones and next steps on this product?
Which one? The NR3269. I think the way I'm looking at it, Nitin, is that, So I think the way we're looking at it is, what we have done is we have taken a very end-stage disease where there's no therapy available. All the first line, second line is completed, and there's no other treatment options which are left. And we're dosing that subset of patients. So advantage of doing a trial on something like this is, you don't have to do like many patients. If you're able to demonstrate efficacy, and we are doing a single arm study. We are not doing a comparison study either, because we're using a subset for which there are no therapies available. So we're able to show response, you will get an approval. Even if you have very good phase 2 data with a reasonable number, you can get an approval. And so I think as long as we're able to recruit those patients and we're able to do it, I think we're home. So we're targeting something niche. I mean, again, the disease is obviously a niche disease, and it's not going to cater to a very large number of patients, but it will be a very critical item that you need in the event that the first line, second line is not working. And I think this is a good one to do and relatively easier to do, and I think hopefully it will work. So I think that's where we are.
And how much time do you think you'd be required to complete your recruitment, given the challenges which are there in such hirings, in such recruitments?
I think difficulty that we're facing on this trial is the fact that we are unable to get Keytruda failure patients. The reason is Keytruda failed. Nobody uses Keytruda in India. There are limited number of patients who use Keytruda because Keytruda itself is so expensive, right? So I think that's a challenge that we're facing in recruiting patients. And typically, generally people who are already on Keytruda failure are already very ill. So it's very difficult to recruit patients. But see, I think we are taking up a challenge. Hopefully, I think we'll have some, clarity in the next 1.5 years, where we're going. We've already done some patients. So far it looks good. So I think, as I said, it's a single arm study. It's not a comparison study. So it's relatively easier to do. But the problem we're facing is the recruitment. I think if we're able to get around that, we have done some amendments to the protocol. So hopefully we'll have some clarity and then we'll be able to recruit. So if you're able to recruit, then I think it could be interesting. But give us a bit of time though, Nitin. I think I can't answer that whether we'll have some clarity maybe in the next 12 to 18 months. We can always ask me for updates every quarter. But as of now, I think let's give ourselves about 12, 18 months to get more clarity on this. Okay.
This was helpful. Best of luck for that. And secondly, on the non-US businesses, 800, 900 crores is I think is a meaningful step up from the numbers we discussed last, if I remember. So which are the major geographies that will be taking up this business, and what will be the drivers for these businesses as we go forward? Any specific products?
I think it's an overall portfolio. I think Brazil and Canada are the biggest ones that we are just driving this business, and to an extent now MENA is also driving this business. These are three geographies that we're doing very well. In terms of products, is mostly our cancer portfolio. I think Brazil and MENA have done extremely well. It's mostly from our cancer portfolio, not a product specific. It's like a basket of products that we have, so which has made a difference. Okay.
And going forward, any specific launches that will drive this portfolio, or this is going to be this?
I think at this time we are just saying it's a cancer portfolio. We're not giving any guidance on specific product at this time. Yeah. Okay, Nitin, thank you so much. I think I thank you. I thank you, everyone. Thanks for the time that you guys have taken to interact with us. We appreciate the time that you've spent with us. Thank you so much.
Thank you. Thank you all.
Thank you. On behalf of Natco Pharma Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.